Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. My own name is Sheriff Daramola, and I welcome you to another edition of the Forex Morning Mastery, your daily dose of financial insight and trading strategy. Trust you all doing very well out there, and I know you will be um, in that state of mind right now where traders begin to wonder if we're really going to be closing the week on a positive note. As you all know, since the week began, trading activities has been more or less range bound, most especially across the assets involving the US dollar. And of course, right now, market participants based on watch tools like the Fed, like the CME watch tool, and there are other Reuters survey market sentiment. We're beginning to see that market participants appear to be favoring a Fed rate cut in the month of May. So it's no longer March anymore, as market participants have now shifted their odds, supporting the idea of rate cut by the month of May. And of course, we also have concerns about geopolitical tensions running in the Middle East at the moment, where just yesterday we learned that the Israeli Prime Minister Netanyahu just did not accept the condition by the Hamas militants, which of course has also incited concerns of further escalations in recent times. So, as market participants try to digest this recent development, I know as we head into the second half of the week and of course gradually wind up for the week, I'm of the opinion that we may likely be seeing some positive traction in whatever direction today. So we will be looking at the current market structure from a technical standpoint, using our technical tools such as the trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today. We will not lose up. We will continue to remain consistent with our analytical approach. Let's see how far this is going to take us for the week. So, with that being said, I welcome you all once again to yet another promising edition. And for those of you who are joining us for the first time, you're highly welcome on board, and I'm very, very excited to have you around with us this morning. And I do know you will be wondering what this is all about. What is it that we really do during the Forex Morning Mastery? I usually share a couple of videos during the course of the weekend, which details our plans for the following week. And based on this video, we usually do follow-up details and of course monitor this asset day in, day out, and of course follow up on all my other social media platform to see how we can manage this position. So we do this on a daily basis, 9:05 a.m. West African time, 8:05 a.m. UTC, and I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And it's also important for you to understand that my aim here in this community is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually be able to use the information gathered here to make your own independent trading decisions and strategies, of course. So once again, I welcome you on board and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that are likely going to be influencing the market sentiments today. And for those of you who have been with me for a while now, excuse me, for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar every morning like this, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, so far this week, based on the assets we have been monitoring, we have focused on economic features from both the United States and the Japanese economic docket. Though this week isn't laced with some impactful event, and this is one of the reasons why market participants are really not sure where price is likely going, as there are no major catalysts that could be serve as a major driver of the of price action. So because of this, I did mention this at the beginning of the week, that trading activity is more or less going to be of short-term opportunities, short-term perspective in the meantime, pending the time we finally have a concrete idea of what is going on in the financial landscape, especially the Federal Reserve's decision as regards to their timeline on their interest rate cuts. So this week so far, we've had a bunch of speeches from key officials from the Eurozone, the United Kingdom, the United States too as well. And yesterday we had a couple of speeches too as well. And one of the key highlights of the speeches of these Fed officials is the fact that sorry please, I'm just seeing a call. Okay, so one of the major highlights of these speeches is that inflation is high at the moment, and that there's likely going to be a higher interest rate for an extended period of time. So that is what we have right now based on what they've been saying. Now, today we're also going to be having another speech. So we do not have any high impactful event, but I try to include the mid-tier economic features, which of course will give us an insight into what participants will be looking forward to today. So the first one on the list here is something that will give us an insight into the health of the labor sector, and that is the initial jobless claims count, which is obviously released by the United States Department of Labor. And this data here measures the number of people filing first-time claims for the state unemployment insurance. Now, a larger than expected number today will indicate weakness in the U.S. labor sector, which of course will dovetail to negative traction in favor of the U.S. dollar. That is what is expected, though we do not know how the market participants are going to react to that unless we look at the current structure on the chart. Then if we have figures lower than expected or lower than the previous month, then it shows sign of a healthy labor sector in the United States. Now, if we look at the previous data here, it came in at 224,000, which is a little bit considerably high. And we have consensus based on what is on ground right now. Economists are projecting 220,000. So based on what is on ground, they are thinking that this data will be lower than the previous month. So we shall look forward to see what the actual data will be like. Will it be just as expected, below expectations, or even beyond expectation? And that will depend on how the market participant will react to that event. But one thing I do know, based on my experience in the financial landscape, is the fact that the major key players in the market who have inner circles within this department, who of course will give them an insight into what is likely going to be happening, and as a result of this information, they will be building up their positions in anticipation of that event, which of course, as technical traders, this is what we are going to be sniffing out from the current chart to see how we can strategically position ourselves using the trails they leave behind in the market. Then later on today, we are going to be witnessing a speech from Barkin Thomas, who is the president and CEO of the Federal Reserve of Richmond, and of course is also a former member and chair of the Federal Reserve Bank of Atlanta. Of course, it's whatever he says today will be giving us an insight into the monetary policy outlook of the Federal Reserve too as well. And let's see if it's going to be buttressing what his other colleagues have been saying in the last couple of weeks. So these are the major events we are looking forward to today. There are no events from the Japanese economy, so we shall be relying on the anticipation of this event, coupled with our basic understanding of the current market structure to position ourselves for the next move. So with that being said, here we will be diving right into the business. And in fact, I had to open up this chart before I started the session, but as you will see, it's yet to load up. I don't know why my USOILSPOT is always like this, but I will try to open up another chart and let's see which one opens first, and then we shall go into the details. So please give me a couple of seconds while we wait for this chart to load up. All right, and while we do so, please click the like button, give the video a thumbs up. Your likes are valuable to us here, and it also helps the economy to grow, as the algorithm, the more likes you give the video, the easier the algorithm will find this video and push it to a wider audience of traders who may find this content beneficial to them too. And thank you very much as you do so. So we're still trying to load up. Okay, instead it loaded so I would have to reopen the USOILSPOT chart. All right, so finally it has loaded up. So the first asset we are going to be looking at this morning, as usual, is going to be the USOILSPOT. And since the beginning of the week, we have had roller coasters of buys and sells. We had a sell yesterday, which unfortunately went into a loss, and then we had our buy position triggered again. And for the sake of those who are not part of our earlier sessions, let's quickly run through how the market has evolved during the course of the week and what has led to the decisions we made. So at the beginning of the week, price action was more or less trading above our key level, which we situated at the $72 area. Remember, we talked about this on our first edition of the Forex Money Mastery, where we did a top-down analysis from the daily time frame through the 4 hours time frame right into our execution time frame, which is the 1 hour time frame. So we are only going to be deliberating on the 1 hour time frame because of the limited time we have for the Forex Money Mastery. But if in any way you missed out on that session, you can easily revisit that video to have a background knowledge, and for educational purposes too as well, get to understand how we use these basic tools to understand the market structure, and using that data as well, manage our positions and strategically position ourselves for the next move. Now, the links are right in the description box of this current video you're watching. You can check them out after the live session. So we had our key level situated at the $72 area, and of course, when price action remains above our key level, we look out for patterns and structures that supports the idea of buying, and we are not selling unless price breaks down the support line, the key level. Now, another important thing about the $72 area is the fact that it has been a strong demand zone in the last 5 to 6 months, which of course makes that area a sensitive area for buyers to capitalize on any accumulation, a character depicting any form of accumulation there. Now, at the beginning of the week, we had this range identified here, where we saw price action confined within the $72.78 level and the $72.20 area, giving us an insight into the prevailing uncertainty at the beginning of the week. Now, there are other couple of factors in addition to this range that also helped us to decide our next move. One of them is the ascending trend line, which we highlighted on the 4 hours time frame. Please check my video to understand this. So we had this ascending trend line, and then we said if price continues to trade above the structure, we look out for patterns and structures to buy this asset. and if price breaks down the structure, we look out for opportunities to sell. We actually sold at the beginning of the week, and we saw price move about 80 pips thereabout. And of course, because it moved significantly well, we moved our stop losses, and we saw buy pressure resume, taking us out of that sell position with a small size of profit, or at a worst case scenario break even, depending on where you placed your stop losses. Now sorry, excuse me please. So now we begin to see a couple of engulfing bullish candles spring out of that area, leading to price action breaking out of the resistant line of that range at the $72.78 area, triggering our first buy position for the week. And since that moment, we have been buying this asset. We had a couple of more positions added. We talked about this yesterday, where we added one more position at the $73.27 level, and then we added one more at the breakout of the $73.65 area. And while we were talking about this yesterday, we emphasized the evolution of price action into a downtrend continuation pattern, which we of course did emphasize, and then took that into consideration too while we were analyzing this market. Now let me give you a visual representation of that pattern we saw here. So we saw this, hold on a second, let me give this, okay. So we saw this impulsive move, after which price transitioned into what looked like a pennant. And of course, we did consider that if price action break down the support line of that pennant, we may likely be seeing price drop to the downside. And one of the things we said yesterday that could incite some bearish momentum was the fact that we had some good news a couple of days ago as regards to the United States, the United Kingdom, Qatar, Saudi Arabia, and which other country? I think there are 5 countries which sent a proposal. There was a proposal as regards to ceasefire to the Hamas, and Hamas did responded yesterday. And as at this morning, as at that time when that response happened, there was a glimmer of hope that there is going to be likelihood of a ceasefire. And of course, when the concerns of oil disruption reduces or drops, we know that price will definitely drop. So we were taking all this development into consideration, and with in alignment with the structures we have on the chart to position ourselves for the next move, if that is going to be the case. So we had this up downtrend continuation pattern identified on the chart, and we said here that we will only sell if price action does break down the support line of that pennant. And then we had a level identified around the $73.65 level to capitalize on that selling opportunity. But unfortunately, that did not do very well, though price broke down that structure significantly with an engulfing bearish candle. But as soon as price broke down the $73.65 level, price only moved about 25-30 pips thereabouts before it snapped back up into the entry point and then hit our stop loss, recording our first loss for the week on the USOILSPOT. Now, since then, we begin to notice price action begin to gain some momentum. And remember, our structures will still remain intact. As you all know, we always try to be very dynamic and keep our options as open, being on standby for any opportunity the market brings, be it buy or sell. Now, with our structures above the $74 area, we had another buy position triggered, as you will see, and price action is still currently trading in that territory. At the moment, we have a buy position running with a minimum of about 20 pips running in profit at this point. And as of this morning, while I was giving my commentary on the recent development in the market, I did identify another level at the $74.32 area, which of course happens to be the highest level for this week. So we had a new resistance line. Looking forward to price breaking out of that structure again to add more buy positions to our existing trade. And yesterday we were looking forward to the EIA report. Remember, the Energy Information Administration in the US, of course, and they reported that their crude oil stockpile rose to about 5.521 million barrels, significantly surpassing both the expected 1.9 million barrels and the previous figure of 1.234 for the upper week. Now, this is a very, very significant number here. That means that there is been a high production. We had a phenomenal production for the last week, so it shows that the demand was not enough to eat into that supply, hereby giving us a variance that supports the idea that the supply is higher than the demand. And if this is going to be persistent, we are likely going to be seeing price crashing to the downside. So at this point in time, and considering the consolidation phase we have seen in the market in the last 7-10 hours now, I'm of the opinion that market participants may be trying to digest the impact of this, coupled with the recent news on the Hamas-Gaza conflict, where we just learned that the Israeli Prime Minister Netanyahu rejected the Hamas offer as regards to the conditions required before releasing the hostages. So this for us is not a good sign at all, which could further escalate tensions in the Middle East. Probably another phase of strikes will begin again as a result of this. But Anthony Blinken has been hopeful that we could reach a stance that will profile a solution into this. But at this point in time, we are caught within a high supply and of course geopolitical tensions in the Middle East. And within this uncertainty, this range here this morning is going to be our center of focus for today, as price action has been confined within the $74.32 level and the $74 area in the last 8 hours. And what we are going to be doing here, of course, you know how we use our ranges in this community. When price action falls into a range like this, we want to exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And if we look at our pennant pattern here, price action is already below the support line of that pennant structure, and if this continues, it continues to the downside, maybe below the $74 area, I'm of the opinion that price may crash to the downside. So let's keep this option open while we continue to monitor price action at this juncture. So price remains below the support line of the pennant, which of course supports the idea of a downtrend move. And if price breaks down the $74 area, we are going to be in for a sell position. But if price goes ahead to break out of the highest point for this week at the $74.32 level, definitely we will be buying or adding more buy positions to our existing trade. So our center of focus for today is basically between the $74.32 level and the $74 area, where depending on the direction of the breakout will determine where price may likely close by the end of this week. So I encourage us all to mark out these levels, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. Alright, so in the absence of no questions, I want to assume that we are all on the same page, and all I've said so far has been quite explanatory. So as a result of this, we shall be moving on to the next asset on our watch list. But if you have any questions or you need some further clarifications, feel free to drop them in the comment section below. So the next asset on our watch list for today is the USDJPY, where we have some interesting situation going on in the market right now, as all of a sudden and out of the blues, buyers have gained some significant traction as the Japanese years face some selling pressure following the dovish remark by the Bank of Japan's deputy governor, that's Shinchin, I guess, I hope I pronounced that correctly, indicating a cautious approach to hiking rates upon ending negative rates. So the idea of a negative rate is now becoming more concrete, like we discussed a couple of weeks ago when we had that the Bank of Japan Governor Ueda um, gave an hawkish remark as regards to their current ultra loose monetary policy of chances of pivoting from it as early as the month of March stroke April of this year. And as a result of this remark, we saw some signs of positive traction in favor of the Japanese yen, as a lot of market participants who have been hoping to buy the yen for a long time begin to hold on to some of the positions on the yen, hoping that there's likely going to be a pivot from the current ultra loose monetary policy, which will probably reduce the differential interest rate value between the US dollar and the Japanese yen. And as a result of this, everyone was hopeful that if they pivot from the ultra loose monetary policy, finally we are likely going to be seeing some significant traction in the Japanese yen. And from the technical structure on this chart, we did talk about how price may likely drop about 200 pips if if market participants gradually build up some confidence in the yen. However, when the deputy governor of the Bank of Japan spoke yesterday, he tamed this idea by emphasizing that even though the Bank of Japan are planning to pivot from the current ultra loose monetary policy, that they are going to be cautious when hiking rates. So this is not this is not a good sign at all. And as a result of this, we saw people selling the yen immediately and buying the dollar in that regard. And as a result of this, we've seen this sudden traction in the US dollar, especially during the Asian session. And with our buy stop order above the 148.275, remember we talked about this yesterday, that this descending trend line is going to be guiding our trading decisions for yesterday's trading session, that if price continues to stay below the descending trend line, we shall continue to look out for patterns and structures that supports the idea of selling, and only consider buying if price action breaks out of the trend line and of course goes ahead to break out of the key level at the 148.500. And with this in mind, we position ourselves above the 148.275, a buy stop order, and then we saw price to trigger that position. And at this moment we have about 57 pips running on that one, and then the second one right now is running with about 35 pips, so we have roughly about 80 pips, and the third position has been triggered right now, though price is trading around the entry zone at this point in time. Yesterday we had a stop loss hit after triggering the sell position right below the 147.8. Unfortunately for us, the bearish momentum did not hold any significant stance. As a result of that, we had our first second stop loss on the USDJPY for this week, and I hope that we will use this opportunity to recover or recoup the losses we incurred through the course of the week. And if this momentum can continue further, we may likely see some more significant profit to hold on to. However, we should also consider the Federal Reserve official speeches during the course of the week, where they have expressed no urgency in lowering borrowing costs amidst this the resilient US economy at this point in time. Now, despite this, the opinion that market participants still anticipate 5 rate cuts based on the CME watch tool, and of course Reuters report, we have market participants still having having the expectations of 5 rate cuts this year, but the timeline is what we do not know. Now, at this point, coupled with the expectations for a possible shift in the Bank of Japan's policy stance, this dilemma can cause a cap into the upward trajectory of the USDJPY at this point. So as a result of this, it is very, very important that we move all our stop losses, secure this current position while we continue to monitor price action. We never can tell what will happen due to this uncertainty surrounding this market, and as a result of this, we continue to maintain a short-term trading stance on this particular market. So moving our stop loss on this one anywhere around or above the 148.500 area seems most appropriate. At least it will allow us to recoup some of the losses we made during the course of the week on this one. And one other thing I would like to emphasize here is that since price action has broken out of this descending trend line, from a technical standpoint, we do expect that some point in time price may still come back to retest the structure in anticipation of another wave of bullish momentum. So we cannot ignore the possibility that sellers could actually come in. Then another thing I would like to emphasize here is that price action is still within the range we identified at the beginning of the week, where price action was initially confined, as you will see, between the 148.825 and the 148.275 area. So I will really need price action to break out of the resistant line of that range, maybe an engulfing bullish candle. If that happens in the next couple of hours, then this will give us much more confidence that we are going to be good by this particular asset. So at this juncture, we maintain a bullish bias. Then there's one more thing I would like to share with you on the higher time frame, though for those of you who watch my weekend video on the USDJPY, you will be familiar with this structure. But for the sake of clarity, let's look at the structure quickly. And one thing I emphasized in my weekend video is how price action has been confined within a 220 pips range in the last couple of weeks, and this was duly highlighted between the 148.500 and the 148.350. And we talked about how the resistant line, which is serving as the key level for the week, at the 148.500, has been a strong selling niche in this market in the last couple of weeks. Now we were looking out for the breakout of that structure to feel very confident that price may likely go to the upside after considering the prior leading price action. So at this point in time, price trading above the 148.500 is a very good sign for us that buyers are going to be continuing the uptrend. But if price drops below the 148.500, we shall revert to our bearish idea with a TP target, a projected TP target at the support line of this range at the 148.350. So let's see how the market will play out. If this momentum continues to the upside, we shall continue to look out for more opportunities to maximize the potential of this bullish move. And in fact, the highest point here in the last 2 weeks is 148.900. So as a result of this, I would like to include that into the criteria and conditions that will make us add more positions. So 148.900, right? So let's see where that is. Hold on a second, let me check that out again. I hope I got that number correctly. So we have it at 148 point, okay, it's just right above it, 148.915, 920. So 148.915, 920 makes quite a lot of sense. 148.915, it's still just right above here, not that too much. So it's still within territory. If you look at it, 148.915 is still within territory. So 148, hold on a second, 148.920. Let me put it at 148.920. Place it at the top right hand corner and look at it right here, just right above the structure. So if price can break out of that area, we shall be looking at to add more buy position, as price will have taken out all the sell positions within the zone to further give us confidence of buying this asset. So let's see how the market will play out from here. If you have any questions whatsoever, feel free to let me know in the comment section, and don't forget to give the video a thumbs up. I have over 11 people on board. Please kindly support this project. That is the cheapest way you can actually support this channel, and thank you very much as you do so. So I look forward to seeing if there are any questions whatsoever before we move on to the final asset on our watch list. So as usual, I will take the next 10 to 15 seconds off, see if there are any questions, then we move on to close today. I'm so sorry. I just got to see that there are some couple of questions in the comment section which I didn't see on the other software I was using to monitor the comment section. So first of all, I see you, Jonah Aruna. Good morning to you. Hello, Princess. Good morning to you. Glad to have you around with us too. I also feel the same too. And Made on Heart is asking, my question is, how reliable do you think selling oil will be? Well, I hope you were around when I was discussing the fundamental factors behind the scenes on the US oil spot and how I correlated these factors to the chart we saw. And we talked about, we identified a downtrend continuation pattern on that structure, a pennant. We saw a pennant, which price is currently trading below the pennant, of course. And we saw we learned about a high crude oil stockpile in the United States from the report from EIA yesterday, with over 9.2 million barrels for last week, which is phenomenally high. And when there is a high stockpile, it shows that the demand could not eat into the supply. So that means the supply is surplus, and when supply is surplus, chances are that price will drop. Now, however, despite these possibilities of a drop in US oil on the US oil spot, I did emphasize that the geopolitical tension in the Middle East is stabilizing prices right now. Though there were hope yesterday when we had about hold on a second, please. I want to. So there was high hopes yesterday that there is likely going to be a ceasefire, as we saw Hamas responded to the plans by submitted by Gaza, Egypt, Qatar, the United States, and of course one other country I can remember. But today we learned that the Israel Prime Minister Netanyahu rejected the proposal from NASA, the conditions to release the hostages, which of course is not a good sign at all, which could further incite concerns about further escalations, which could disrupt oil production from that area. So we are hung within the balance right now, and we are hung within the balance of high supply in the market and concerns about further disruptions in the Middle East. And if we find ourselves in this kind of situation, we usually want to understand how market participants are thinking. And the only way we can understand how market participants are thinking is to identify structures and behavioral patterns using the chart. And as a result of this, we were able to identify a downtrend continuation pattern in the form of a pennant. Let me just quickly show you so we can see. And theoretically, when we have a pennant on our chart, it is a sign that we could be having a downtrend continuation. And as you could see right now, the sell position has just got triggered right now. As you see, this is the pennant right here, which I did emphasize earlier, and this could be a limiting factor of pushing price to the upside. So I did illustrated this. We had this bearish impulsive move, price transition into this consolidation phase, giving us a pennant structure to work with for today. And we did emphasize here this morning that if price action breaks down this support line of the pennant, and of course the $74 area, will definitely want to be looking out for selling opportunities around that area. So in the meantime, I also emphasize that whatever trading opportunity we are having during this phase in the financial landscape, it's going to be more of a short-term perspective, as we really do not have a scope of how far this current situation in the financial landscape is going to last. So we are still in a limbo, especially market participants still trying to know when what the timeline of the federal interest rate cut will be like for this year. So we don't know yet. So it's more like a limbo we have right now. So more or less, whatever trade we are taking should be short-term trading opportunities in that regard. So I hope I made myself very clear, made on heart. If you still further need some clarifications, feel free to let me know in the comment section. And please don't forget to give the video a like, and thank you very much as you do so. So with that being said here, we'll be moving right into the final assets on our watch list for today. So the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And this morning I gave a commentary on this asset where I did emphasize how price action is gradually transitioning into a reversal setup. Remember, we have been holding on to a bullish bias in the last 48 to 60 hours in this market, considering the fact that price action was trading above our ascending trend line that we identified at the beginning of the week. And for the fact that price action was trading above our key level at the $2,035 area, we are more confident that price may likely find some buy pressure to push price to the upside. And of course, during the New York session yesterday, for those of us who were part of the XAUUSD live window right here on this platform, we saw how price moved significantly, triggering two buy positions. As we saw this move all the way here, moved about 97 pips thereabout, while the second position moved about how many pips was that? About 27 pips. And I do hope you moved your stop losses accordingly. If you had done so, you must have been taken out with a reasonable amount of profit on that one, though it's still very, very small compared to what we usually make on the XAUUSD on a weekly basis. And so far this week, based on the nature of the market dynamics, the financial landscape, we really have not seen a huge traction. And I did emphasize how the reason why this uncertainty is prevailing due to the uncertainty surrounding the timeline of the Federal Reserve interest rate cut for this year, and this has of course dragged market participants to wait for fresh impetus in form of economic events, which we do not have for this week except for speeches from Federal Reserve officials. Now, the current bullish momentum is facing some resistance, really. I did mention this morning, and despite this, though we saw some buying potential during yesterday's trading session, stroke the Asian session, but this did not gain any traction, though the buy positions we saw gathered during the Asian session was as a result of the risk on sentiment driven by a weaker US Treasury bond yield. And of course, we know how the US Treasury bond yield is directly proportional to the US dollar. Now, as at the last 3 days now, the US dollar has been struggling to attract buyers amidst, especially amidst the expectations of an imminent shift in the federal policy stance. And this could potentially continue to bolster gold prices, of course, as concerns over sluggish recovery in the economy of China. China being the world's second largest economy, and if the economy is not doing well, you know, it's a sign that other economies too will not be doing very well. So this is how the market thinks in this case scenario. So if one major economy is not doing very well, it could reflect on other economies as well, and the other economies may be covering things up, but with time it's going to show up. So because of this, market participants may like to be cautious and move their capital from currency assets to safe haven assets such as the gold. Now at this point, and based on the nature and character of price action in the last couple of days, I'm of the opinion that market participants are very hesitant and are opting to wait for release of the US consumer inflation report, which is coming up next week, as this will further give us clues into the future policy of the Federal Reserve. So as a result of these dynamics, we need to be very, very cautious in this market. Look at what has been going on here in the last 2 days, I think 2 or 3 days now. Look at price has been range bound, though we have a bullish trajectory here, but price has been more or less range bound. Now this is the reversal pattern I was talking about earlier. Now if you look at the structure here, considering after price testing the $2015 area right here on Monday, you will see price had consistently found higher highs, and in fact we initially had this ascending trend line guiding our bullish momentum, but as soon as this trend line was broken during the Asian session today, it changed the dynamics of this market, giving us something that looks like a head and shoulder pattern. So if I give a visual representation of what this looks like, it's like this. So we have this impulsive move since Monday's trading session. Price got into this point at the $2038.50 level, dropped back into the 2032. Then we saw price climb up again, find a new high at the 2045 area, then dropped again into this level during the Asian session again around the 2032, and as since you can see the buy pressure has appeared to be reducing with time. And if you look at the structure, it's gradually transitioning into what looks like a reversal pattern in the form of a head and shoulder. And usually when we identify such reversal patterns like this, the next thing we want to be doing is to mark out the neckline of that reversal pattern, as we will need price to break down the neckline to validate the potency of that reversal pattern. And coincidentally, we can see how the neckline I identified here this morning shares a confluence with that newly identified ascending trend line. And as it is right now, price action just broke down the neckline at the 2032 and of course the ascending trend line. Now the question going into today's trading session is, will the dollar gain some traction today? Will they? Or is this going to be just a way to shake out some buyers from this market before the uptrend continuation happens? Now, with this information and idea in mind, how do we intend to position ourselves for the next move? Now, considering the fact that price has broken down the support line, it makes a lot of sense to sell below the $2032 area. Now, for those of us who missed out on the breakdown here, excuse me, I did emphasize this during this morning that we will be selling the breakdown of the 2032, but for those who missed out on that opportunity, it's okay. Let's see if the market will come back and retest the structure. If it does, then we want to be looking out for selling opportunities. So we're looking out for something like this, price either coming back to retest the 2032 or coming back to retest this ascending trend line. All we want to look out for are signs that buyers are finding it difficult to climb back above the ascending trend line and the $2035 area, which happens to be our key level for this week. Now, if this happens, it will reflect on the chart as price doing something like continued selling pressure below the structure to incite a downtrend move. It could go to as far as the trend line, or it could go to as far as a $2,032 area before the bearish momentum happens. So we can easily have a sell limit order somewhere around the 2032 and the 2033 area, having your stop losses right above the 2035, giving enough breathing space for price action to move around to join this potential downward trajectory. And if price action continues to drop to the downside, then we have multiple levels like the $2,027 area to add more positions to our existing trade. So let's see how far this is going to go. So for those of us who capitalize on that breakdown, well done to you, and let's be hopeful that price will continue to the downside at this point. However, if we get shaken out of the sell position and price continues to climb new highs, how do we intend to buy this asset? Well, for me, I want to be looking out for buying opportunity only at the breakout of the 2035, but I would like to see some confirmations before I jump into that position. And why is that so? Well, if you look at what happened in the last 24 hours after price tested that high around the 2045 area, we have seen some series of lower highs in this market, emphasizing the strength of the sellers at this juncture. And in fact, whenever we see a series of lower highs like this, we connect them and have a descending trend line to work with. Now, with a descending trend line like this, we want to continue to maintain a bearish bias as long as price action remains below that descending trend line. And the only condition that will make us want to be buying this asset is for that descending trend line to be broken to the upside. And like I said earlier, we will need a retest of structure in the form of a confirmation to make us feel comfortable in that buy position. But if you are one who is very profitable on the XAUUSD so far this month, and your portfolio is positive on the XAUUSD, you can afford to place a buy stop order above the $2,035 area. But if you are very cautious and patient, please let's wait for price to break out, retest the structure on our lower time frame, something like this, breakout, retest, and then at this point the appearance of buy pressure around here will give us a good opportunity to continue the uptrend at around this area. Trust me, I will be with you in the comment section of both my trading view and Telegram platform to give you updates as at when due. However, I already have the link to the XAUUSD live window right in the comment box below, pinned at the top of the comment box. You can click on that link, click on the notify me button so you can get notified as soon as we come online. So this is how we are going to be managing our trade today on the XAUUSD. And if you have any questions, feel free to let me know in the comment section. And I'm here to see your likes, please. We have over 12 people on board and we only have 3 likes here. Why is that so? This is the cheapest way you can support this project. Please give the video a like, and thank you very much as you do so. Now, I see your comment. Fearless Prank Comedy says, how can I start? How can I start? I'm not sure I understand what you mean there. I would like that you rephrase that statement so that I can get a better perspective into what you mean by that word. So with that being said, I will take the next 10 to 15 seconds to wait and see if there are any questions whatsoever before we go ahead to round off on today's Forex Morning Mastery. And thank you very much, guys, as you support the channel. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. all right. So, in the absence of no questions, I want to assume that we are all on the same. Okay, I see your comments again. I don't know how much trading, but I'm ready to learn. All right, no problem. Continue to be part of the subsequent editions on the Forex Money Mastery, and with time you get to understand how things works in terms of analytical approach. And I will advise you to also read literatures on technical patterns and understanding how to do technical analysis. Find some literatures on technical analysis, and then continue to be part of our subsequent editions. And with time, you get to understand how this works. All right. I hope you found that useful, fearless prank comedy, and keep on getting in touch, and let's see how you are progressing. All right. And thank you for being around. So, in the absence of no questions, I want to assume that we are all on the same page, and it's on this note I would like to come to the end of today's Forex Money Mastery. It has been a wonderful moment with you guys today. I really appreciate every single moment. It's just that you did not like the video as expected. We only have 5 likes here compared to 12. 7 other people are watching without doing anything to it, but it's okay. That's how live is. But in that being said, we were able to attend to 3 assets today. That is the USOILSPOT, the XAUUSD, and of course the USDJPY, where we were able to identify simple trading setups that we will be using to guide our decisions for today. And I do hope you mark out these levels on your chart. If you did, well done to you. So all we just need to do is exercise patience and wait for the structures to mature before jumping into any position. So on this note, I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye-bye.